I'm just looking at your price target. You're definitely the bear when it comes to this. So you actually lowered your price target a short time ago from 384 down to 376. The street average is 425. Why are you so bearish on Lululemon?
I think Lululemon's problems are far bigger than what management has talked about. It's not about missing one or two sizes. It's about a mature business that is a #1 market share leader, not just in women's sportswear, but in total women's apparel in North America. And so it's a mature market leader that is slowing down as the market slows and is having trouble attracting new customers, younger customers, male customers. And so they're at the point now where they're paying for growth. They just did a 15% off coupon all through May for all new customer acquisition. It's the first time they've ever done this. So, they're facing slowing growth. They're trying to struggle to keep up growth. They're throwing everything they can at China, at new customer acquisition. That's going to impact margins. So this isn't about an isolated problem. It's not just about cyclicality. It's about the eventual slowdown of this business. And unless they do something different with innovation or with customer acquisition, they're going to continue to slow down.
Aneesha, that's some conviction. Man, that's a heck of a bear case right there. Jharonne, I'm going to come to you. You're our bull right here. One of the things that we highlighted was same-store sales falling, basically being cut in half. That's usually a pretty troubling sign for a retailer. Why are you still so bullish on this?
Well, you got to understand the 3% reflects healthy consumer spending. So 7% on top of difficult comparisons from a year ago still shows that consumers are engaged. In fact, when you compare Lululemon to the competitors, it is the one particular athletic wear that has the upper hand when it comes to customer loyalty. They have such strong customer loyalty that they've built through a community, which the other retailers don't have. Also, analysts polled by LSEG are very bullish on the performance for the second year with their innovation, the new styles, and also the smaller sizes.
Styles. I mean, I've been to Lululemon. I didn't see anything new in there.
Well, they're introducing newer styles that they're going to appeal more to the younger crowd. Also, this is an Olympic year. Don't forget that. Lululemon is also going to be sponsoring the Canadian team, and that also brings brand awareness for Lululemon. So analysts are bullish on these initiatives for the second half.
So you see some tailwinds. Aneesha, I'm going to come back over to you. You mentioned the 15% discount. We were actually talking about this amongst ourselves. I have a lot of Lululemon pants, and I paid full price for each one of them. In your mind, is that a troubling sign that Lululemon now feels like it has to discount?
Yeah, I mean, this has been one of the few quality brands, to Jharonne's point, they've been high quality. They've had a loyal consumer base that's been willing to pay full price. They still have loyalty amongst their existing consumers. The problem is they can't attract anyone new. And in order to attract new consumers, they're now seeing organic growth slow to the point that they have to pay for it. So they're doing this toggle between gross margin and top line growth, which is not only troubling for gross margin, but it also indicates that they're continuing to see bleeding out the top line, where some of these younger consumers that came on for belt bag are now leaving. They're struggling to acquire new customers. So I think
what about some of their smaller competitors, Aneesha? I don't want to cut you off, but 87% of Alo stores were within 1 mile of a Lululemon store, and then the other one, Vuori, 93% of those stores. How much are these newer brands attracting these younger consumers that Lululemon's trying to get?
Yeah, I think it's more about Lululemon not being able to retain them. But yes, you're right. I mean, where are they going? They're going to Alo. The younger consumer, the Alo is specifically targeted towards the younger consumer. So the consumers that came on for belt bag didn't stay because of the price points and the styles not appealing to them, are now flocking to Alo. On the men's side, we're seeing Vuori being a big competitor, but there's also a long tail of newer men's brands that are going aggressively after the Lulu consumer, trying to pick them off.
All right, so Jharonne, again, I know you're a bull. You're seeing a lot of upside. And again, I think almost everybody here at CNBC wears the pants. A lot of us have the pants. Shout out to Joe Kernan. But I do want to talk to you just about the fact that when we look at your data, the LSEG Restaurant and Retail Index, earnings are 22.5% higher. But when we look at big box stores, it's 165% higher. I mean, just a big jump. Is it just possibly consumers are just going to trade down and continue to trade down? And maybe they're even buying swishy pants. That's what I call them. Swishy pants at Walmart or Target. I mean, maybe they're finding a better deal there.
Absolutely. We've heard this from a lot of those discounters, that consumers are still coming to their stores. When they come to Walmart, they're opening up their wallets for more discretionary items. One of the biggest trends that we saw this earnings season is that value was the big winner. Discounters, off-price retailers, and activewear to some extent also were the strongest segment. There's no doubt that inflation is still on consumers' minds. Over 50% of the companies that reported did mention inflation being a problem during their earnings call. And as a result, we're seeing that the value proposition is key not only for the first quarter, but will continue to be so for the rest of the year.
Speaking of value, Inditex reported its earnings today, obviously the parent company of Zara. We're going to get Lululemon later today. After these two reports, what do you think we're going to get as far as a read on retail? Because Inditex is on this end, Lululemon's on this end.
Yeah, so we're expecting to see a lot of the discounters report this week, like Ollie, Dollar General, Five Below. The one that analysts polled by LSEG are the most bullish on is Ollie because of its low acquisitions. Dollar General is also expected to be healthy, as we're gonna be looking to hear what happens with the low-income consumer because they've been trading down themselves. Right. They've been hurt the most with the higher inflation, and as you know, the middle-class consumer continues to trade down. High end is in much better shape.